Hi folks, Marina Stroud here. I am your product education lead. Thanks for joining us today and letting us be a part of your educational journey. Please take some time to review our previously recorded beginner and intermediate bootcamp webinars found within your help menu. We want to educate members across all Tradesmith products. If you're new, check out Kristen's beginner level webinars and join the intermediate lessons when you feel up to it. We include a webinar script as an excellent reference for each webinar presentation. As you know, attending live will provide you with a more interactive one-on-one platform where we answer your questions, and we also have a webinar Q&A after each presentation. So I just want to remind you folks, after careful consideration, our education team has decided to alternate our beginner and intermediate boot camps. So we want to work on some new and exciting educational endeavors where we can provide you with some more short how-to videos and some more specialized training for each product and level. All right, so let's check out today's topics. Last week, Kristen showed you how to use the Quant tool. The Quant tool can help you build a new diversified portfolio that applies equal risk position sizing. And if you're not familiar with that term, it just means that we're risking the same percentage of our trading capital per trade. Today's lesson answers the following member question. How the heck do I rebalance my existing portfolio, add additional holdings, and maintain diversification? Whew. Well, with the help of the Quant tool, you can find new potential trades for your portfolio and rebalance your holdings according to equal risk position sizing. There are current limitations to maintaining diversification, which we will get to. I also want to share some new and exciting updates for the tool, which will solve the tool's current limitations. Before we get started, let's review our disclaimer. The information we present today and in upcoming tutorials is only for educational purposes. We are not financial advisors and cannot provide individualized advice or recommendations. We are recording today's presentation, so if you miss something, don't worry about it. You'll be able to go back and rewatch it at your convenience. Please try to keep your questions about the topic at hand. I can open the floor to all general questions at the end of the presentation. Great, let's get started. With that, we are going to head to the website. One moment, please. All right, so I'm on my Tradesmith Finance account. Remember that you'll log into your account via finance.tradesmith.com, no matter which product subscription you hold. Also, just keep in mind that I have access to the full suite of Tradesmith products with a platinum subscription, so your site's going to look different than mine. So while we're here, I just want to quickly point out the help menu at the top navigational header. You can click that button. Your help menu is going to be adjusted here according to your subscriptions. My platinum folks, you have your contact information there. And then our customer success team number as well. You can expand any of these folders to review its contents. You have the schedule a concierge appointment. That's where you can set up a 30-minute phone appointment with an agent to answer some questions that you have saved up, right? Or, ask them for a walkthrough of a feature or tool. And then you can scroll below. Here's our boot camps and video tutorials. I updated the video tutorials. I organized them a little bit differently. So let me make sure this works here. You can click on how-to videos. So this is part of the project that I was telling you folks about. Before, we had all the how-to videos in like one long list. So I want to kind of organize them based on topics. Here's general how-to videos on portfolio management, the tools, alerts, products, newsletters, and then you can also access the beginner level lessons and the intermediate lessons. I know it's a little skimpy right now, but Kristen and I will be busy creating how-to videos in upcoming months, and we'll start building up our library of how-to videos. All right. Very good. Let's go back to the site. We are going to start here with the pure quant. So I want to show you what I did. I built a billionaire's pure quant portfolio. That's this one right here. You can see I dated it on May 11th. And I'll just click to open it just to show you. It's got 10 positions. I created it through the Pure Quant tool with the Billionaires Club as my only source. So I selected all of the Billionaires Club and had it with $100,000 as an investment amount with 10 positions. So here's the positions. Since I created the portfolio, we have Bolero, ticker BOWL. That's in the yellow zone just 5 days ago. All right, so here's the portfolio that we created. So our premise is I want to add 5 more billionaire stocks that meet the pure quant rules. So I have 10 positions. You see, I have 10 positions. I want to add 5 more. I want to build it up to 15 positions. You can go to the Pure Quant tool and find the best performing billionaire stocks in the green zone in minutes. So we're going to go over the rules, the Pure Quant rules in more detail. But let me go back here to show you the existing diversification quotient. So if I go back to the Manage tab, it's in my Watch Only. And here you'll see the PVQ and DQ columns. So right now it just bumped up. Yesterday was at 1.77, but 1.78 is our diversification quotient, and our portfolio volatility quotient is approximately 15%. We're so 15%, that's low risk. It's the same as the VQ breakdown for when you're looking at your stocks. Anything up to 15% is low risk. 15 to 30 is medium risk, 30 to 50 is high risk, and anything above 50% is like a bucking horse. That's extremely high risk. So the VQ can determine the portfolio's overall risk or expected portfolio drawdown. I want to say it's expected because it doesn't accurately tell you what your maximum drawdown would be if all of your positions stopped out at once. But it's a pretty good approximation. So the PVQ considers the VQs of the holdings and the price cross correlations between the assets. So it's just looking at price cross correlations. It's not looking to see if they're in different sectors or different industries. It's purely based on price cross correlations. So I know you're already asking, what's that DQ all about? Are you talking Dairy Queen here? Because you're making me hungry. Oh, no, I'm not talking Dairy Queen. So the diversification algorithm has come to us after some extensive research. Now, we all know that volatility is related to returns. However, we also want to avoid taking that risk. Well, to create a more concentrated and focused portfolio, we found a way to minimize that portfolio risk through uncorrelated stocks with higher volatility from different sectors. So typically, you have a higher PVQ if your holdings are correlated, right? Meaning if they're moving up and down together, your PVQ is probably going to be higher. When you're diversified, you can potentially have higher risk securities like stocks that have a higher VQ and even achieve a lower overall PVQ. But we're going to get to that when we get to step 2 of the tool. And then we have a breakdown of the DQ, which is in your script, but anywhere from 1 to 1.5 is weak. That's a weak DQ, okay? And then 1.5 to 2 is moderate. Oh, this is really difficult here to write. I feel like a child. And 2 and above is the best, okay? So that's strong. That is strong. Right now, we're at 1.78, not too bad. If you're already wondering, I did rerun it again yesterday and managed to lower the PVQ, but the DQ went lower. Okay, but we're going to talk more about this. We're going to rerun it again together, and we'll see what numbers we get on this run here. So let me just erase all this chicken scratch here, and we'll jump to the Pure Quant tool. Grab my little spotlight. All right, so to access the Pure Quant tool, you're going to go to Invest at the top navigational header, and we're going to hit Pure Quant below. So we're going to start by building a new Pure Quant portfolio. So we're going to hit that button there at the top, and we're in step 1. So in step 1, we choose our sources. Now, remember, keep in mind, we already have our portfolio. We want to add to it. So in this lesson, I'm going to show you how to add your existing holdings to the individual securities field. Kristen already covered in her previous lesson all the different sources that you can add to create it. We've already created it. So now we're wanting to add additional holdings. So within the individual security source field, we're going to add our tickers. Now, it may be prudent here to duplicate your tab, your internet tab, so that you have your portfolios page open. Go to Manage. We can click on our portfolio. This is the portfolio I created on the 11th, right, with the tickers open. So we can sort it here alphabetically, and then we can have the other tab open to the Pure Quant, and we can start entering our tickers. So what's the first one? AJRD. Now we hop back here, AJRD, and select it from the drop-down menu. You can do that, or you could just write them out on a piece of paper. That's fine. I'll just refer to the script. So I'm just entering these tickers and selecting them from the drop-down menu. BOWL, which is now in the yellow zone, but I don't want to sell it because it hasn't been stopped out per the health indicator. That is the exit strategy I'm using. So I'll select Bull. What do we have here? LANC for Lancaster Colony, THS, Treehouse Foods, BIIB for Biogen. And so once you get the hang of it, it'll go faster. Once you select the ticker, you have to click off the menu to be able to click back on to type in the next one. SFM for Sprouts. I love Sprouts. TBPH and WDFC. But, you know, there's not too much around in my area for good quality organic foods, but Sprouts is pretty good. All right, so once we've selected, that's 1, 2, 3, 4, 5, 6, 7, 8, 9. Am I missing one? I think I'm missing one. Oh, here we go. TDC, Teradata. Okay, so now I've got my 10. That's all you got to do in step 1. All right. So make sure that this is also checked. Include these tickers regardless of the Pure Quant rules. And the reason why I say that is, remember, Bowl is currently in the yellow zone. As you will soon find out, part of the rules is that all the tickers must be in the green zone. The next thing you want to make sure that you have adjusted on step 1 is just make sure the sources combination is set to any. That should be the default, so you shouldn't have to adjust it. If you utilize the individual security source field, you've got to make sure it's set to any. If you don't, the only results that you're going to see are the tickers within this field. This way, the tool will include your individual securities and any other sources you select, which we're going to come up here and select all of the billionaires. You don't have to select all the billionaires. You can choose your favorites if you'd like. I'm just going to select all the billionaires so I have a good source pool here to choose from. All right, so now let me answer this burning question. I don't see that anyone has asked it yet, but I'm going to ask it. So Marina, why don't you just select the portfolio instead of having to type all these tickers? And that's a great question. The portfolios and watch list source field does allow us to select that same portfolio, right? So I can easily select it. But, and there's a big but here, folks, not all of their holdings are going to meet the pure quant rules. Remember, bull is in the yellow zone. And there's other rules that we're going to cover here next. So I'm going to take that off. Now we're going to go to the step 2 of the tool. And we're going to review the tool's default settings. So these are the pure quant rules. You don't need to adjust these tool settings if you want to follow the pure quant rules. And the rules are pretty simple. Red zone stocks are not healthy because their prices have dropped by their VQs, so they're moving unusually based on their historical price data. These securities that you see, your results will be in the health indicator green zone, moving well within their VQ range, typically trending up. Daniel, would it not be a good to include the re-entry portfolio? You certainly can, Daniel. The tool will use it as an additional source if you'd like, but certainly you can add as many sources as you'd like. I just wanted to keep it simple for today's lesson since we are working with the Billionaires Club. All right, so moving on here, the stocks will not have an average volatility quotient greater than 40%. If you're working with cryptocurrencies, this would be much higher at 80%, right? The securities, either cryptocurrencies or equities, will all have a positive gain since they triggered the health indicator entry signal. So we don't want any losers here, folks. We just want those that are making money right now. If we scroll down the tool page, you're going to see there are some specific volume criteria for the stocks. You can adjust that if you would like. And then you want to make sure the maximize diversification feature is enabled to yes. All right, so now let's discuss the limitations of this maximize diversification filter when we're using the individual security sources field. This diversification filter will not consider the tickers that we just entered into individual securities. It's only going to apply the diversification filter to the additional holdings that it adds. So the 5+ that it will add to our portfolio. All is not lost, folks. Have no fear. When we finish this lesson, I'm going to share some exciting updates on the Pure Quant tool that will make us all happy again. All right, so now we need to customize our portfolio. So besides the maximize diversification, you can also narrow it down by market capitalization if you'd like. We can either hit customize portfolio here at the bottom, or we can scroll back to the top and hit step 3, customize portfolio. All right, we got to enter in our available capital minus any cash that you wish to set aside. So this portfolio's total value was approximately 100,000, and it was fully invested, right? And I want 15 positions. I already have 10. I'm going to add an additional 5. So I want a total of 15. You are going to need to determine the maximum number of stocks you can comfortably manage. Owning smaller numbers will give you a better chance to outperform the markets, while owning 100 or more stocks limits your ability to outperform. And you know who you are out there, those of you that have 100 or more stocks. I don't know how you do it. But yeah, I could not possibly manage 100 positions right now. Plus, it could be more expensive to manage a large portfolio of stocks. You also need to consider the tax implications before making any changes. So, Robert, Dennis, are you all referring to typing in the symbols?
Yes. So Robert said, is there a simple way to copy and paste the symbols rather than toggle between two screens? And I was going to stop you to ask Dennis' question. It's about one of the filters.
I see. Yeah, I don't know if you can easily go back and copy and paste.
Yeah, I've never tried that. Yeah.
We can play around with it after when we get to the Q&A. I've never tried that, to be honest with you. So yes, you really want to consider how many stocks you should own. Several years ago, we did some research to kind of determine what the optimum number would be. And overall, anywhere between 20 to 60 have around the same gains within 1 to 2% of each other. So anywhere within that range will optimize your returns based purely on those numbers. If you want to know more about that study, I've included a couple of links in the webinar script that you can refer to.
And Marina, before you move on to do the build portfolio, what if the market was in an overall downtrend? Would you not select the uptrend on the filters on the prior screen?
So what are you referring to as far as the trend?
So for example, if the whole if the market overall was in a downtrend, yeah. How would you do that?
Well, there's, that kind of goes into that lesson that we have on the market health, analyzing the market health. If you're very conservative and you see that the major markets are triggering our bullseye and bear's eye signals. Now, this is part of Ideas by Tradesmith, but if you're seeing like the S&P 500 triggers a bear's eye, NASDAQ, right, triggers a bear's eye, the Russell 1000 triggers a bear's eye. If we start seeing that, then we're probably going to get out of the market entirely. What this tool is doing is going through all your sources to focus on the top performing securities within our database. So we're going through the Billionaires Club. So we're going to pull the top performing Billionaire Club stocks. But there are some rules, right? You have to have a trade plan. If we're in a bear market, you may decide to hold off on investing in the stocks right at the moment, or you will be very cautious, right? That just depends on your risk tolerance. So then we go to step 3. I'm going to put my 100,000. I've already got 15. And then I just hit the build portfolio button. So we'll do that and check out our results. Very good. So here you can continue using the site. Oh, it's done. So we'll click view pure quant results. And let's see what we've got here. So you're going to notice that all of your positions that we entered here within individual securities are listed at the top, right? They're with a number 0. This is an easy way to distinguish between the holdings you entered and then the positions that the tool generates for you. These are the additional positions numbered 1 through 5 that the tool has generated for us. So we can review any of these securities. Now, you may see additional tickers that also qualify. And if you do, they would just be grayed out. That would allow you can then include them if you wanted to. So for example, if you did not want Stride, you can uncheck it, right? And then you could select any other tickers that were added additionally to the list. So just to recap here, and I know Kristen covered all of this information, but here it tells us the number of shares for each of these holdings. We're at equal risk position sizing. We're risking 1.36% of our entire trading capital. Again, that doesn't mean that we're putting the same amount of money into our positions, right? If you look and compare a couple of these VQs, let's find a low one here. For example, Lancaster with a VQ of about 19%, we're putting more money into this security as opposed to one with a higher VQ, right? Here's Teradata at about 32. We'd be putting almost half there, right? So that's something to consider. All right, so now let's save it. And then I want to compare the two portfolios, the initial portfolio that I created, and then our portfolio right now. So we'll do new portfolio and we'll title it Billionaire Pure Quant with additions, and I'll date it so I don't get it confused from the one I did yesterday. 5/16/23 and hit add. All right. Robert, did you raise your hand? I saw a little hand get raised. Please reiterate why bull is included, being that its health rating is not green. That's a great question, Robert. So when I initially created the Billionaire Pure Quant portfolio, bull was in the green zone, and so it was included at that time. Now, our whole agenda for today is I've got 10 positions. I want to add 5 more, but I'm not going to get rid of any of these positions that I just entered just because bull entered the yellow zone. So I want to make sure the tool knows that I want you to include these tickers no matter what, because they are active holdings. I just want you to add 5 more that might complement the portfolio. And that's why when we go to, let me come back here to the Pure Quant tool. When we go to build a Pure Quant, that is why we added it to the individual securities field, because I can then tell the tool, BOWL, for example, I want you to include these tickers regardless of the Pure Quant rules, because as you know, the Pure Quant rule states that they will be in the green zone. The whole point of the Pure Quant tool is to help us build a portfolio of securities that are healthy, right? Typically trending up, that don't have ticklers. Yes. Yeah, Douglas, say that 10 times real fast. I dare you, right? So you're looking for healthy securities in the green zone that are typically trending up. We don't have crazy bucking horses, right? And they're at a positive gain. But in our scenario, in our lesson for today, we're using the Pure Quant in another way. We're using the Pure Quant here to add additional holdings on top of what we have, with the billionaires as our source. And then we added our tickers, which included bull, which is in the yellow zone. Would you delete bull if it changed to red? That's a good question. If bull went into the red zone and the health indicator is my exit strategy, I certainly would exit bull, and I probably would not include it, right? So I'd have to kind of figure out what amount of money is the value of bull once it goes into the red zone, and maybe figure that into my portfolio value. But I certainly would not invest in bull then. I would follow my exit strategy. All right, so going back to my portfolios, we're looking at some comparisons. So we'll see what we get here. Let's look and see. Let me grab my little annotation tool here. Okay, so here's the original, right? We're at about 15%, 1.78. Oh, wow, look, check it out. Even better today. Look at that. So we lowered our PVQ down to almost 10%. That's huge. And we're at 2, just over 2 for our DQ, which is, what do we say? Strong DQ. Yeah, I know, I'm a wizard. I wish. Now, it inadvertently increased our DQ, right? But that's not always the case, right? I mean, just yesterday, look at this. You see how some subtle changes in the positions can alter things. It's not supposed to increase your DQ. It did inadvertently, but that's not generally the case. Let me show you some things here that will put your mind at ease. Let me pull back our PowerPoint. Let's talk about these pure quant updates that I've been raving about. Now, I want you to note that the following images that I am about to show you are currently in mock-up. Our development team and design team, they're still working on the pure quant tool updates and design elements, so there will be some changes, okay? When you come to the pure quant tool, you're going to see 2 options. You're going to see like a build a pure quant portfolio from scratch. And then you're going to see a re-optimize my portfolio, which is the path that we would take in today's lesson if it was available. So then we would be prompted to select our portfolio. So we won't have to punch in all of those tickers, right? So there's some light at the end of the tunnel, folks. So then you'll hit that next button. And then you're going to be prompted to answer the following questions. So you'll say, how many positions would you like to add? Right? So I would type in the 5. And then that tells you the total number of positions. And then you would enter in the amount of additional cash if you want to add any additional cash. There's some other features here if you want to allow for fractional shares, or you can disable it. But it'll include your portfolio name somewhere in here, your total value, cash. So you'll make those adjustments. And again, this is just a mock-up slide. We'll then hit the next button. And then once you answer those above listed questions, the tool will allow you to make adjustments to your current holdings. So Robert, remember when you asked about the red zone position? So you can actually, like the risk rebalancer tool, you can lock the share size of an existing holding, or you can exclude it. So I would hit exclude it. Now, I'm not sure what some of these other features are, or if they will be included, but I know for sure they'll probably have lock and exclude. Again, these are just some mock-up slides. So then once you make adjustments to your current holdings and decide, okay, this is in the red zone, I'm going to exclude that sucker, go away. Then we're going to go to the next step. And the next step is including our sources, right? And in our case, we chose the Billionaires Club, but you can come and select any source that you'd like. You'll see the maximize diversification filter is enabled. And this will diversify all of the positions. Yours, your existing portfolio, including the ones that are added. Then this is pretty cool right here. Once you hit build portfolio, it's going to give you 3 sets of results that you can choose from. So each set will include, the portfolio value, the cash. It'll include a quick view of the diversification quotient, the PVQ, and health distribution graph. So you can click on set 1, set 2, set 3, review the positions and the DQ and PVQ information, and decide what works best for you. Again, our team is still improving the tool, so these screenshots may not include all the updates, or they may look a little different from what's displayed in my slides. But I wanted to give you a sneak peek on what's coming down the pipe here.
Marina, do you know what the definition of optimize is on that?
Optimize. Are you looking at a screenshot that I have?
I think so. That's what Robert asked. And he asked it when you were showing the prior screenshot, I believe.
Let me go back here. Again, keep in mind that these are just kind of like mock-up slides. So I don't know if they'll be exactly what it's going to look like.
I think it was before that one. Yeah.
Oh, to re-optimize. So that's what we're doing in today's lesson. We're re-optimizing the portfolio. We can't really re-optimize with the diversification quotient because as I mentioned, the filter will diversify the new holdings that are added to that results. It won't include those that you added to the individual security source field. But that's why I wanted to show you these updates, because in the future, it will re-optimize everything. Equal risk position sizing, diversification. So if you wanted to add additional holdings to your portfolio, it will find tickers that will do best or do well with your existing holdings. And you won't have to type in all the tickers, which is the best part, right? So that is a wrap on today's lesson. So today I showed you a simple approach. Let's hop back to the site. Just a simple approach to finding some new potential trades from our Billionaires Club by going here to the Pure Quant tool, Invest, Pure Quant. We went to Build New Pure Quant. So we wanted to find new potential trades from the Billionaires Club that we could add to our existing portfolio. And we did that by entering in the tickers manually here under the individual securities field. And we did that because we want to bypass the Pure Quant rules that are listed here in step 2. And then we went through the process, right? With this maximize diversification filter. I just want to make sure, just to reiterate, that in its current state, the maximize diversification filter will only be used on the new tickers the tool finds, not those that you're adding to the individual security source field. It may or may not increase your overall DQ. Interestingly enough, it did today, but it didn't yesterday. So I'd have to compare and see what the different, obviously there are different tickers that got pulled in yesterday versus today. So, but with these new tool updates, this is all going to be a thing of the past. You'll be able to re-optimize your portfolio. If you want to come in here and I want to add new tickers to my portfolio, you'll be able to re-optimize, select your portfolio, select your additional sources, the number of new holdings you want to add to it, and you can review 3 different data sets or result sets groupings that you can pull from. Willard, you don't have DQ on your screen, so I have to look up what the access is for DQ. It might be based on your subscription level. If you have a Trade Stops Lifetime, I believe you should have access to it. Platinum will have it, Essentials will have it, but besides that, I'm not sure. I'll have to double check on that. You have Platinum? Well, then you should see it. When you go to My Portfolios and Manage, you don't see the DQ column right here. Let me know if you see that while you're working on that. Yes, we're going to get to those questions, Douglas. Hang tight. Let me just go ahead and put up the contact us, and then we'll get to your questions. Okay, 1 second. All right, for those of you that have to get going, thank you so much for joining us today. If you have any questions, don't hesitate to contact our dedicated customer success team. On Monday, May 22nd, Kristen is going to host a live presentation on the Risk Rebalancer tool. Now, the Risk Rebalancer tool optimizes an existing portfolio according to equal risk parity. So if you want to add another ticker to the portfolio, there is a feature that allows you to rebalance the portfolio with any new potential trades. The difference between the risk rebalancer and what we covered today is that the risk rebalancer will not provide you with new potential trades that will enhance your portfolio's diversification. Also, it's not considering the pure quant rules, right? Unless you have a specific ticker in mind that you want to add, and it doesn't matter if it meets the pure quant rules, then the risk rebalancer might be another option for you. So she's going to cover that tool, which is essential for you to do, occasionally, right? On a yearly basis or quarterly, or, it depends on how active you are. If you're more active, you may want to do it quarterly. Alrighty, folks, thanks for joining us today and letting us be a part of your educational journey. Until next time, bye. All right, let's go back. I think I want to start with, whoa, Kay. I'll get to your question in a minute. Maybe Kristen can summarize Kay's question in a minute, but let's get to
Or I'll copy and paste them if we have to email you, Kay. We will do that.
Yeah. So Douglas, would you explain the language in maximize diversification? The explanation seems contradictory. Okay, so are you referring to the information that's listed here? Step 2, right here. So what it's doing is it's just looking at price cross correlations to find stocks that are not moving in the same direction. That's all it's doing. And when you have a diversified portfolio, you can potentially have stocks that are higher risk and still have an overall lower portfolio volatility because those stocks are not moving up and down together in the market. Douglas, let me know what specifically seems contradictory in the explanation, and we'll get back to that one. John, it does not take into consideration ratings. It does not. The maximized diversification is simply looking at price cross correlations. That's it.
There was a question on the new Pure Quant. Is there going to be like those 3 sections? Do you know where it would give you an option to remove like positions to replace positions, like they're already in your portfolio?
For the new updates?
Yeah.
Yeah. It will show that. Let me hop back. And then I think I can answer some of your questions, Kay, but hang tight 1 second. Let me jump to that slide. So like when you're going here, this is going to look similar to the risk rebalancer tool where you have the actions column that allows you to lock or exclude tickers. Don't pay attention to this rebalance and close and replace. I don't know exactly what those mean. That might just be mock-up stuff. It might be included. I don't know exactly what those mean yet. But I know you'll have some flexibility to decide whether you want to exclude a position or maybe lock the shares in place. Kay has a question about the constant cash flow. I think they have a buy up to price. So as long as it hasn't hit that buy up to price, it should still be good.
Yeah.
So as long as you're still under or, at that buy up to price, you should still be good. Kristen, can you copy? Did you copy her? Okay. And then I'll message John and Wade, and we'll get that answer to you. And then maybe or maybe you can ask them, Kristen, for me.
Yeah, of course.
I'll
Yeah,
be in my meeting and
yeah,
then email Kay back.
for sure. Yes.
That would be awesome. Thank you.
Welcome.
All right.
Robert wants to know, is it reasonable to establish parameters that automatically delete symbols that change into red?
Well, not always will you want to, it just depends. I know some of you out there are investing in stocks that are in the red zone, right?
Mhm.
You may have a compelling reason to invest in a stock that's in the red zone. Maybe it was a recommendation and you have, you know, you have your own reasons for investing in a stock that's in the red zone. And who are we to tell you not to? I mean, that should be your decision, right? Ultimately. But I think giving the option to whether um continue investing in it or not is ideal for all members, giving them the choice, right? To exclude it.
Yeah. Maybe you have time for one more question. I know you have to get going, but why does D ticker symbol DLTR show green when the predictive alpha shows bearish?
Oh, we'll look at that.
Yeah.
Excuse me. Douglas is talking about where it says more concentrated and focused. Yeah, I can see where, that is a little bit confusing, more concentrated. Yeah, I'm not sure exactly what they're meaning by that. I mean, because I know that when it's diversified, you can have stocks that are higher risk. So you're potentially getting more returns. You're concentrating those returns, right? But you're taking on less risk. But I don't know precisely what they mean by that. It sounds nice though, doesn't it?
It does.
Yeah, I wouldn't get too caught up in the weeds on that one, Douglas. The whole thing is it's looking at price cross correlations to find stocks that aren't moving up and down together, right? So, and potentially that would increase, you could have stocks with a higher VQ to, optimize some returns there without taking as much risk. That's it, bottom line. And we'll look at DLTR. Shows in the green zone, but it's got a bearish prediction. Remember, folks, this predictive alpha prime is a short-term price projection, 21 days out.
Yeah.
And so in 21 days from this point, the predicted date, it's assessing that it's going to be down 0.60%, 0.6%, right? To 158.19. And it's at 158.77 right now. By the way, they're going to be including some updates here where they will include the latest close price that this is based off of. So you're not comparing it to the latest price, today's latest price. You're comparing it to the latest close for the day it was, the model was predicted this.
Yeah, next Thursday I'll show that.
Right. Keep in mind, the health indicator is a long-term indicator, a health status based on how that stock is moving in relation to its VQ. If it's moving well within its VQ, it's typically, it's in a healthy state and it's typically, but not always, trending up. In this case, it's moving sideways. But when you're using the health indicator, you're going to probably be holding these stocks for about 8 to 12 months, generally speaking. Predictive alpha, at this time in phase 1, we only have the 21 price prediction model, right? So in 21 days, we're going to see a dip in price. So it's a bearish dip. Not too bad as far as a price dip, though.
And Douglas understood. He said, just call him a weed puller.
Yeah, I am the same way, Douglas.
She
I
is.
am the same way. I'm what they call anal retentive.
You are.
Oh, there's no buy up to in the constant cash flow. Maybe I'm confusing that with the predictive alpha because they're also doing that as well. Okay. We'll find out. Kristen, if you can help me
Yeah.
out with that. Oh, you're funny, Douglas. All righty, folks. I've got to wrap it up. I've got my appointment I've got to get to, but we will see you all next week. Yes, thank you, Douglas. Fingers crossed, everyone.
Yes. And you guys can always
Um,
email us questions too.
Yep. Shoot us an email. You could put it to my attention and Kay, Kristen's going to help you out with your
Yes.
question. Get with John and Wade
John and
and
Wade, yeah.
shoot you an email. Thank you, folks. I appreciate your wishes and kind words, and we'll see you all next week. All right.
Bye, everyone.